Good afternoon, ladies and gentlemen. First and foremost, thank you, ST Property, for inviting me to discuss about this topic, venturing overseas. I'm from Orange Tea, and basically Orange Tea is established in the year 2000. We are basically providing a one-stop services in real estate services for our corporate and individual client, and under our umbrella, there are various departments ranging from agency, residential project, international project, which I'm spearheading. And we do have also an investment and advisory department, which this year, we have actually incorporated a Japan business development unit where we just tied up with Tokyo Livable, Japan. And of course, we are supported with our research and consultancy and valuation department. All right, I shall start this topic discussing venturing overseas. What property investor need to know? This has been a very to the heart of the investor, especially in recent years with the cooling measures and of course with the prices of Singapore property. All right, this is a chart basically to show that, of course, Singapore property, we are one of the most expensive city in the world. You can see that we are ranked one of the top. And of course, to the Singaporean investor, nowadays everything looks cheap thanks to our strong currency performance. Over the years, this is a chart of 5 years, basically Singapore dollar versus some of the major currency, British pound, Australian dollar, ringgit and peso. All right, before one decide to venture into overseas and decided to commit a foreign overseas property, we reckon that the investor have to know something that is definitely going to be more complex than buying a local property for the various reasons which I'm going to highlight. It could be the location. Even in a single country, let's say Malaysia or UK, every different state have their own rules, own sets of regulation and regulation and their restriction. So probably investors need to have a look at that first. And also for foreign ownership, clarity of foreign ownership. Investors have to know what they can buy first. There are restrictions on what kind of property you can buy and who you can buy from sometime in specific. Financing matters are definitely going to be different, and same goes to the legal costs. We will expand on later. The lack of the understanding of the market. Insufficient information on transaction. Unlike Singapore, many other countries, they do not have very transparent transaction data which you can get it straight from the internet. May not be possible for many other countries. And of course, there are other risks involved. Okay, so what are the key considerations one should really look into before you even venture into your first overseas property purchase? We classify them, basically categorize them into 6 categories. You got to understand your needs. Every one of our needs in investing overseas varies different. For somebody who have already 5 property in Singapore and is trying to just, because he need to park his money or invest his money if he feels that he want to diversify his investment, may be very different. His decision he makes may be very different from another person who just want to buy something which is for the son accommodation when the children is going overseas for study. And the list go on. Know your risk appetite. Every market has its own risk and potential. So you have to identify which market. Identify the country first, then the state, then the area. Conduct your research. This would take up a lot of time, but it's essential. Conduct your research on all the things from the conveyancing, the prices, the legality part, the financing part, and the list goes on. Identify cost and financing. Different market, basically, they are, most of the time, the investor over here who buys overseas market, they probably will go for some leveraging on the loans. But every different market have different financial I would say LTV, even in the specific area, let's say London, for example, a zone 1, you may be able to get 70% loan, whereas in a zone 3, the LTV may be reduced to 50 or 60%. Get professional advice. Wow, this is something which everyone's before investing should know, that you can't just get advice from one party. I myself, I'm also an investor, but I never believed that you can get all your answer from one person. So you have to go to a different professional to get the different information which you need. Two main person you have to talk to first is probably your lawyer first, and then the tax man, because there are implications as a foreign ownership. You buy as a foreigner buying overseas property, there are tax implications and there are definitely legal implications. So you have to get all this right, apart from talking to your developer and of course your friendly agents. Have an exit plan. All right, so we expand a little bit on understanding your needs, the objective of purchase. First and foremost, ask yourself, what do you want that property for? And this probably will be the most largest driver for investment, driven by the growth and returns, because in some overseas property, if you look at the gross rent, okay, the keyword is gross rent, okay? Just basing on the gross rent example, you can get as high as 6% to even as high as 9%, all right? But we will go into detail later. The other group is more on the needs rather than the want to invest, because there's a need. You're sending your child to London to further his study, sending your daughter to Australia, RMIT and whatsoever. So it's quite common, you know, instead of helping somebody else to pay his mortgage, why don't own a property for yourself? So this is also one of the major contributor to Singaporean buying into overseas market. It can be for retirement home, retirement plans, particularly obvious, especially if you're right now, Iskandar. Many of our investors, although when they purchase, they would say that hey, it's for investment. But once you put in further, there's always this side objective. If the property they purchase now, maybe their retirement home in future. So, well, some others invest because just as a holiday home. Maybe they went to this resort, they love this resort, you know, so they decided to buy one to serve as their holiday home. Mobility and lifestyle, and of course, just Mr. Alfred have covered one also, is actually wealth preservation. Yeah. All right, know your risk appetite, adapt a holistic approach to financial planning and for mid and long term. The key word here is mid and long term. We are here to discuss about investment, not speculation. So investment, ones have to adapt a mid and long-term horizon to see the impact. Do your own risk assessment. Well, if your risk appetite is that if you just want a passive income, you know, not too much of heart attack, don't need to sleep, you cannot have peaceful sleep, then probably you like to try, you know, go to the more mature, tried and tested market. Normally that refer to the more mature markets such as probably UK, Australia, and certain part of Malaysia. Yeah. Emerging market, potentially higher returns, but of course it comes with considerable additional risk which need to be managed. All right. So what are the potential risks? These are some of the lists: the property, the political and social risks. Consider the total cost, and of course the currency risk. Research. Okay. Make sure you talk to your friendly lawyer, solicitor, to make sure that whatever you're buying, you are legally allowed to buy. There are many products in the market right now, especially in Singapore right now. You can see that all sorts of products coming in from all over the world. And some product, you may ask yourself, hey, can I buy this? And yeah, if you do your search, some of them you may realize that you cannot. But either the people who are promoting it will say that you can buy it through certain kind of proxy and whatsoever. So when these products are involved, you have to pay special care to ensure that you are really buying into something which you can buy. And like what I say, the best person to check with is actually the lawyer. And know your taxation liability. Yeah. Know the property tranche. And know the political situation and the natural climates of the country. All these factors will decide what you want to invest and how you want to invest. And of course, the transaction process may be very different from Singapore. Just quote an example. For example, London, the exchange of contract, when you get your contract, you will probably only get a contract which is signed by the vendor. not both party. You know, in Singapore, normally you get a contract with signed by both parties. But the exchange of contract in London or in UK in specific, you will get a copy which is signed by the vendor. Yeah. So they will keep your copy, you will keep their copy. All right. And of course, know your dispute resolution avenue. Identifying the cost and financial. First, like we have previously mentioned, overseas property may appear to have better value, but you should take into consideration of overall cost, inclusive the financial cost. Because interest rate, for example, interest rate is very much higher when you invest into overseas market. All right. And currency loan, you may not be able to obtain. It all depends again on where you are investing, the zone you are investing. The LTV, the loan to value offered by the bank may be very different. Yeah. And some banks don't even provide certain overseas, provide loan for overseas property. So you have to, and of course, the TDSR applies too. Payment stage and amount. This is to, you have to know the payment stage and the amount involved, because that is to make sure that your whole process of acquiring an overseas property goes smoothly. I always say, buying an overseas property can be very stressful. Yeah, so don't increase the, don't increase the stress you get. Get all these things, and then you will ensure that it is a smooth sailing process. Do take note of other costs involved. Transactional costs, example, state consent fee. This one we can explain a little bit. The recent announced Budget 2014, the Malaysia Budget 2014, there are some changes going to be implemented. Even the state consent, in particular for Johor State, for example, there was a proposal to increase the administrative fee for processing of foreign consent to buy property in JB. Yep. I reckon it's talking about this state consent, which actually have certain impact. Example, if it's 4% based on the price of the property you purchase. If you buy a 1 million ringgit right now property in JB, for example, you used to need only to pay about 10,000 fixed, 10,000 plus 500 administrative. But if the proposal get through, that means you have to pay 40 to 50,000. That's one of those. Yeah, we'll cover more of that later on. Yeah. All right, operating cost is another thing which one should take note of. Unlike Singapore, I say I'm sure there's many sales person here. Singapore agents are very good. We provide a lot of free service. Handover free. Okay, handover the process you free. Don't need to pay me, right? Help you to call tenant, service your tenant free. Unfortunately, it's not the case in many overseas markets. London, for example, you're going to pay the tenancy management fee between the range of 10 to 18% of your gross rental. Yes, it's 10 to 18%. Australia, you pay about 6. All right, let's go on. Have an exit plan. Liquidity is important. So the potential buyer pool, okay. This, again, the announcement, Malaysia Budget 2014, again, it may impact your potential buyer pool. Example, now at this point of time, you still can buy RM 500 and above, minimum. But should the implementation kickstart, that means RM 1 million. Imagine this, you buy a 600,000 property right now, Malaysia RM 600,000. And, okay, you went through everything, you are the rightful owner right now, but once the law kick in, what happened means that means your 600 RM property right now, which you own, can only be sold to the local. You cannot tap into another international buyer to buy your property because the minimum investment value required is 1 million. So these are the very direct impact which you may have to consider. And of course, the affordability of the local citizen, resale demand, and other things such as the capital gain tax. Okay, the next few slides, what we're trying to do is to compile some of the checklists which investors should take note of when you're investing into this country. Why this country? We reckon that these are currently the hotspot, I would say. Many people are looking into investing all this country. First, it's always the first of the checklist, legality of purchase. All right, we are referring, this charge is referred strictly to residential projects, okay, not other type of project, not other type of property. Okay, for legality, for Malaysia property in particular, make sure that the investor need to know whether they are, at which stage they are actually buying this property. Is it before or after the advertisement permit and development license is issued? In short, APDL. This is the license which a developer need to obtain before they can officially sell. Okay, but what's happening right now is that over the last 2 years, especially for Iskandar projects and some other region projects, developer, they are not selling. Basically, they are registering the interest of the buyer. So what you do is that the product is being marketed in such a way that you as a buyer, you put in a deposit, let's say 10,000 ringgit, into a stakeholder account, which normally is the solicitor from the developer, registering your interest that you want to buy this property, this unit, at this price upon the developer obtaining the APDL. What does that mean legally? In other words, in fact, it is not legal binding at that point of time. So if, for example, right now, you buy a property 600,000 right now, you register your interest, okay? And the Malaysia budget 2014 kicks in, minimum 1 million. So the unit which you right now place, so-called place a deposit, 800,000, technically you cannot buy right now because there's no SPA sign. Right, so just make sure that you know at which stage you are buying. For Philippines, SPA basically is a private agreement. So the SPA varies. Unlike Malaysia, it's governed by the HDA, which is the Housing Development Act, whereby they dictate in the SPA you can't just slot in anything you want. There's a standard format which you have to follow. Right, but for Philippines, do go through the contract to make sure that whatever, if you feel uncomfortable, you can speak to the developer. Yeah. The good thing is that for major developer, big developer, normally their contracts are quite standard. So this is a special attention need to be paid to, especially you're buying from a first-time developer or a small developer. Yeah. For London, there's always a legal report prepared by the solicitor, the vendor solicitor, whereby you can have a look at it. In the legal report, you will cover the major aspect of the development, inclusive the things like the number of the percentage of shared ownership housing or affordable housing inside there. So sometimes if you ask the agent are not sure, just ask for a legal report. Can I have a copy of the legal report? They won't give you probably, but they probably let you have a look at it. Yeah. So ask for that before you sign on the dotted line. Same goes to Australia, but it's called vendor statement. Okay, next we come to signing of SPA. The process may be different. In Malaysia, in general, I'm talking about those who have already obtained the APDL. 14 days after you put in your deposit, 14 days, and they provide, normally Malaysia developers are very generous. They provide lots of, I would say, freebies for the buyer. One of those is the free legal fee by developer. They basically absorb the legal fee which you need. But do take note, when the developer provides you free legal fee for the SPA, it does not mean that the lawyer is representing you. Okay? Under the Legal Profession Act, the lawyer cannot represent you. But they are just providing you the service to make sure the contract, they go through the contract with you. Yeah, so if you're concerned about your interests and you want to make sure that your interest is protected, you may want to seek a second opinion or third opinion from your own lawyer. But like what I say, because it's governed under the HDA Act, most of the time it's quite standard. Yeah. Or for Philippines, interestingly, the signing of SPA can be much later. Not 2 minutes, but it can be 2 years later. And they allow a signing, basically. So just do take note. London, 21 days in normal. I mean, if you are talking to a developer, let's say you go to talk to the developer, the London developer. But when you're buying in the exhibition, sometimes the exchange may be immediate. Okay, as long as there's a lawyer solicitor, they normally will engage a solicitor to be your representing lawyer. That means the lawyer represents you. And what they will do is that you will sign on the dotted line on the contract. The lawyer go through with you and he will ask you, Mrs. and Mr. So, are you ready for, can I do the exchange for you? And if you tell him or her yes, that means it's officially exchanged. They will get in touch with the vendor lawyers, and that means you are contractually bound to complete the sales. So if you're not ready to commit, please don't ask them to go ahead to exchange. Yeah, you can sign, but don't exchange first. Let me go through certain things first. Okay? Australia, 14 days, and the good thing about Australia is that normally there's a cooling period, 3 days cooling period. Okay, title. This is another interesting topic. In Malaysia, the title, residential title, then they have a lot of terms, you got the so, ho, so, fo, so, vo, I myself, I get confused sometimes. But just do take note that most importantly, make sure that you go through the lawyer to ensure that whatever you're buying, residential property, is not one which is not for human dwelling. That means it's basically you cannot stay there. It's more for commercial. So just make sure of that. And for service apartment in Malaysia, it is not the service apartment like what you see in Singapore. It just means that a residential project built on the commercial title land. All right, the list goes on. For London, well, quite standard, except for if you're going into buying into some specific property, like example, student accommodation, you may want to look at the other contract which are tied in with the sales, because this is you're buying to lease. So there are certain conditions which you may like to look at it. Example, like the increase in the maintenance, how many percent, and how to get out if you do not want to continue with the scheme. All right. Delivery date, okay, they have different terms. For Malaysia, under HDA normally it's 36 months, but I understand, I've not come across this yet, but there are some which can extend up to 60 months, which is, I understand, is for mega development in some of the areas. For Philippines, turnover date, and if the date expires, normally in the contract, they give the developer 6 to 12 months grace period to complete. And for London, there's always a long stop date and a sunset clause. For Australia and London, your 10% deposit sits in the escrow account, and if the project doesn't kick off, you'll get back, the escrow account will make sure that you get back your deposit. All right, product specific, just need to take note. In Malaysia, the restriction come in many forms. It can be purchase price and specific type. Philippines, landed no, unless it's a company owned, it's a company purchase, but 60% has to be owned by the local. So safer bet. Local, go for, for us, condominium, 40% for investor, 60% for local. London, there's always a component of shared ownership or affordable housing in the development. That's a mandatory in most of the development in London. And for Australia, you can only buy brand new or under construction. That means, in other words, primary market. And, okay. Floor area, just take note. London, Australia, some countries, the balcony should not be included in the total floor area. So in some marketing agent or some developer may want to make their price look attractive. They may add the balcony area in the total floor area. So just take note that it should not be. It should not be. Yeah. Other things to consider, car park. Don't think that your property will come with at least one car park. In many markets, in many countries, the car park doesn't come with it. You have to pay additional money for it. This same goes to Philippines, London, and Australia. All right, other related costs. These are the other related costs that you should take note. Stamp duty. Stamp duty are basically almost, I would say, in all countries, there are certain form of stamp duty. It's just a different percentage we are talking about. Interestingly, the monthly holding cost, this is the one which I reiterate again. The management fee is definitely going to be high. For London, it's between 10 to 18, depending which zone and what kind of property, plus VAT. If you're complaining about GST 7% being high, their VAT is 20. Okay, Australia is 6%. Okay, the list goes on. Financing. Know what kind of financing you can obtain from the various banks. In this slide, I'd like to highlight is actually the interest rate. Yes, it's not a typical error. It is 7.5 to 9%. It is. So in other words, if you look at the overall cost, you have to take note about all the actual costs. The gross rental yield may be 9, but if you take into other costs, it may tell a different story. But there are still people investing in. For example, we have buyers who buy into this market, and the reason why is that The answer is quite obvious. They told me, if I were to, this is because they have already the ready money to purchase, cash purchase. So instead of putting the money in a bank, which earns less than a percent interest, if they can buy a property, let's say in Philippines, paying full and get a rental yield of 7.8%, 9%, why not? They treat that as a FD. Yeah. All right. This is the Malaysia Budget 2014, which will be. These are some of the extract which I think will directly impact the buyer consumer behavior in investing in Malaysia. Yeah. They're talking about increasing it to 1 million minimum. It has been ongoing this in Penang. Penang have started it first. It's just that right now it's going to be applied to the rest of the country. Capital gain tax, it will be increased to 30% first 3 years. The detail is in the devil is in the detail. In fact, the first thing I did was I called up a lawyer to inquire. We are still waiting for detail to come out to finalize, who will be affected. Yeah. And prohibit DIBS. This is very much in Singapore. It's very similar to the IAS, which was abolished a few years back. The interest absorbed scheme. Yeah. So they are going to abolish this also. They are not going to allow this to. Yeah. And introducing a private affordable ownership housing scheme. I see this more like in reference to the London one, something similar. But again, waiting for detail. All right. Next few slide. Hotspots. Okay, Iskandar. For residential, currently the hotspot will be flagship A and flagship B. Flagship A is JB Central, Danga Bay. But again, everything looks cheap to Singaporean because of our strong dollar. But bear in mind that whatever you're investing right now, especially in the hotspot, you are entering the market also at the new height. Okay, prices in new launches in JB Central right now easily. You're lucky if you can get something below RM 1,000 per square foot. The new launches are talking about 1,003 or more. For flagship B, we are talking about two hotspots, Berdini, and the other one would be Puteri Harbour. Berdini is probably the only area which is 99-year leasehold, but they come with special perks. Prices is already between 800 to 1,000 PSF, RM, sorry. And Puteri Harbour, again, new height. I'm expecting anything to be at least above RM 1,004 and above. All right, Philippine hotspot, I would just zoom down to Makati, the CBD and Greenbelt area, well liked by the locals and expat. Bonifacia Global City, entire new city developed. These two are the hottest spot right now. And of course, if you talk about Marina Bay, the proposed 4 casino going to be there. But that will take quite some time. I was just there last week, 2 weeks ago. Yeah, and of course the OCBD, the Ortigas. Right. For Australia, Melbourne in specific, people like CBD, especially this part of the world, always want to go for CBD. But do take note, CBD is because of the unique situation right now. CBD can give you good rental yield. I don't deny that. But just do take note for Australia, you need to sell back to the local at the end of the day. And you need to sell back to the locals. So you got to make sure that the local like CBD too. Which feedback is that normally the local prefer to stay a little bit suburb. All right. Good area to look at is like South Bank. South Yarra is actually the #1 suburb in Melbourne. And you have Dockland and South Bank. Just to take note, for these two areas, the LTV might be lower. The LTV might be 50 to 60% instead of the 70. I go on to London. Most of our investors here in Hong Kong always like to go into Zone 1. Yes, Zone 1 is attractive, I can understand, very beautiful, but priced equally beautiful. Now probably about 1,700 to 3,000 pounds per square foot. Well, there's nothing wrong buying in Zone 1. Zone 1 probably will give you a return of about gross 3 point something, but as an investor, you may like to explore the possibility in regeneration area. Regeneration is a big thing in London, and the good thing is that because, especially in the regeneration, if you are going in the initial phase, there's great potential for capital appreciation, and they can give you yield, gross yield of about 6 to 7%. Yeah. All right. In conclusion, the overseas property market offers enormous opportunity, right? But there are definitely risks to be managed. And always do your due diligence and seek your, expert advice. Like myself, I also call up the lawyer in Malaysia to check things. I will call up the bankers. And this is to avoid unpleasant surprise. And last but not least, in short, invest with your head, not with your heart. With that, I thank you once again. If there's any question, we can do it later during the panel discussion. Thanks.